Well, good evening, everyone. Welcome back to the channel. So I was trying to brainstorm ideas on what all I could coach you all up on, in addition to what I've already coached you all up on. And I was reviewing some results from a poll that I posted, and it suggests that some of you may need a little more coaching than others. We'll go into that later. But for tonight, I actually want to re-examine the AIYY fund, which is YieldMax's AI ETF. So we're going to look at that, and I'm thinking there may be some potential upside. So we're going to definitely review all of that over the course of this video. By the way, I'm still using Yahoo Finance, but I may not be for long because I'm getting an affiliate link for Seeking Alpha. So we'll definitely see how that goes. All right, so I'm going to share Yahoo Finance. Now, last time I did a kitchen video, I had a little bit of a crash on StreamYard, so hopefully we don't replicate that again. Okay, so what we have as far as the YieldMax AI Option Income Strategy ETF, right under the T-Mobile ad, we are trading at $16.45 a share, and we're going to look at the history of this fund so far. So this fund debuted November 28th, so we've fallen over $3 a share since the fund debuted. $3.32 to be exact, almost a perfect 333. So this could potentially be at a decent buying point, and we've gotten some really good dividends in the fund, but we're also going to look at the history of the AI fund, the AI.C3 or whatever it is. Okay, so let's first look at the dividend history on this one, and I'll give you my professional coach's theory on why I think this one has upside this year. I think AI itself has a lot of upside this year. So January 5th, we just got a $1.349 dividend, which was just paid like a week ago. And that was actually our first dividend in the history of this fund. So the fund debuted November 28th. So we took about a month, a little over a month to get our first dividend. So not too shabby. We're actually on pace for, darn it, I don't have my calculator in front of me. My phone is my calculator typically, but it's also my screen. It's okay. I will find a calculator sooner than later. Okay, so 134.9. I should be able to just do this in my head, right? So that's actually almost 100% dividend payout, because what did I just say? We are trading at 16.45, so 16.18 annualized based on the January dividend. So that's a 98% payout. Now, will that sustain? Most likely not. I'm thinking not, but I can always be more certain because unlike other channels, I happen to be in possession of advanced financial forecasting equipment, which often helps me to come up with answers when it comes to my most pressing investment questions, not just with investing, but in life as well, key decisions. So my equipment, let's see what it tells me. Will the 100%, nearly 100% dividend payout sustain? Let's see if it's awake tonight. My sources say no. It spit out an answer immediately. How about that? But what we can do, we can always ask the equipment the question until we get the answer we want, right? It says doubtful, so we'll ask it like 3 times. If it gives us 3 negative responses, then not so good. Now it says it is certain. All right, so we had 2 negative answers, 1 positive answer. So like I said, probably not going to stay at a 98% payout. Anyway, so that's that. We ignore the after hours with these. This was up 2.27% today, though. So let's see how we're doing here so far. 4 minutes in, none of you commenting yet. I miss when I used to get 100 live viewers, like 6 months ago. Those seem like the good old days now. Oh well. Okay, so what else here? Okay, so we're going to look at NAV. It's slightly above NAV. That's a good sign. We've been dropping consistently each trading day, so that's a little concerning. But we're also going to look at, so since the end of December, we've kind of been dropping in a lot of stuff, but the market did have a really good day. The Dow was up almost 400. The Dow's about to hit 38,000, but who cares about the Dow, right? The S&P had a new record. We went up almost 60 points today, 1.23%. So we're at 48.39. We may hit 5,000 within a month or less. And then NASDAQ was up 255 or 1.7%. So tremendous day for the NASDAQ. We're well above 15,000 in the NASDAQ. The Russell 2000 still has yet to get to 2,000. We're at 1944. We have crossed 2,000 before, but we're looking to do that soon, especially since the coach is in key Russell 2000 funds like the TNA. And a lot of you are fans of the IWM and IWMY from Defiance and things like that. Definitely want to put a plug in there for our favorite dividend ETFs, right? So it's funny, before I realized what this was, the ticker symbol sounds like a piratey. It sounds like like a pirate or something. It's AIYY. So right? Okay, now we're going to look at the AI. This has a funny name, C3.ai instead of C3PO. So the C3.ai Incorporated is 2481. So here's the deal. The AIYY is underperforming its index fund, basically, because this was up 3.12%. What did we just see in the ETF? We saw it was like up 2.26% or 2.27. So it's underperforming the underlying 2.27%. So yeah, it's an underperformance. But AI has been kind of all over the map here. We'll get to comments towards the end of the video here. Oh, perfect. Actually, you know what? I'm going to move this comment up to the front of the line because it happens to be the only comment in the line right now. And it's from Hog Farmer. Well, of course, when you're here, you make the live stream. There's no question about that. So glad you're here. And more comments are always welcome. The more, the better. Okay. So yeah. Oh, we went back here. I want to go back to AI. C3.ai. Sounds like a droid from Star Wars. Okay, so pretty soon AI will just invest for us and we won't need coaches or social media influencers. Hopefully not. I think we still will. I think that will be the differentiating factor still. Let's hope for it. Okay, so since December of 2020, that is, this fund shot all the way up to 161 and then 153 February 8th. That's just incredible. Then it crashed down to earth. It was all the way as low as 1090. And then in 2023, it started rebounding. We went as high as, let's see, 40. So the 52-week range was 48.87 for the high point, 13.45 for the low point. That's a pretty significant 52-week range. So if we just look at a year trailing here, obviously the peak was here in June, and the trough was just a little before in April. So between 48.87 and 13.45, that is a $35.42 difference. So if you got in at the 52-week low, you would have almost 3x your money to the upside if you got out at the 52-week high. But who does that, right? Those are advanced tactics for sure. This has a market cap of $3 billion, which is pretty incredible. Let me see if this also has, this has earnings too. So this is actually a publicly traded company. It's beat earnings 4 of the last 4 quarters. The next earnings, how about this? February 29th, the leap year date. So anybody celebrating a birthday on February 29th, they get to celebrate for the first time in 4 years their leap year birthday. So that's pretty cool. But that's beside the point. So the 1-year target estimate, according to the Brain Trust here at Yahoo Finance, is 26.58. 24.81 is the current price. So this is implying not too much upside. But if we get back to the 52-week range, the high point within the range, we would double. So that's why I think there's definitely some upside, especially as AI grows. So that's why I'm really fired up about this one, if you all can't tell already. I'm also fired up about getting more comments and more live viewers. So far, we've got 13 of you on, so chat away, comment away. Okay. And if you're ever in doubt on what to comment, you can always put it into ChatGPT, right? Remember, I haven't broken out the space helmet in a while, but there's no real space helmet comment or question. There's no such thing as a dumb question, except for the one not asked or not said, right? Coach's rule. All right, let me stop the share here. Now, speaking of the space helmet, I do have to address a bit of a concerning point of concern here for you all. So I was focused on Tesley a little bit this afternoon, and I saw it's very concerning that it's dropped below $10 a share. But I went ahead and I did a little short clip video. And on top of that, I posted a poll to see if you all thought, that if you all were still bullish or bearish. And then I posted a third response, which was kind of supposed to be funny, but I was a little concerned how many of you all picked that third response. So I have to say, I'll be right back. So the third response in that poll was definitely a space helmet response. So any of you that picked that third response, you definitely get the space helmet tonight. So this is for you all that picked that response. And at one point it was like 17% of the responses. So it's a little concerning, I have to say, because that's supposed to be the joke response. And I'm sure some of you just picked that as a joke, and I'm just having fun too, of course. But anyway, of the poll results, let me share this real quick. Let's share the, what's this? Have you ever heard of a reverse super chat? Oh, is that where, that's where I have to pay you guys back? I would not like that. That would not be cool. Would definitely not be cool. Did you super chat me before? I can't remember. I know your profession is lucrative enough to where you could probably super chat me every day, right? A little bit of a joke there. I'm not actually sure. I don't know a lot about you, but you might have been. I know I was getting super chats back in July. Okay, let's share the screen here real quick. Now I would be for like a super chat, like 100 for 1 split, where it's the same super chat times 100. That's not the way a split really works, of course, but all right, let's see. So the 49 of you voted in the poll this evening. 14% of you said that bulls and bears are both scary animals, which they can be, but when it comes to investing, that's not quite the response that we're looking for. So bullish and bearish were really the two choices, and 47% of the respondents, as the survey says, are still bullish on Tesla despite it dropping below $10. 39% are bearish. This is like a classic poll. It's like we got the third party foil here, and then we got the two parties, and then the one wins by like 8 points. Who knows? Could be what happens this year. But anyway, so, and then I posted a little bit of a follow-up. Kudos to 17% of you that selected the response. Bulls and bears are both scary animals. In response to my latest poll, I'm impressed. You guys really do know you're investing. Well, actually, it suggests that I have more work to do in terms of coaching you all. Although, you know, we have made significant strides for sure. Let's see here. Oh, you want me to pay you $5 to smash the like button? Well, here, hold on a second. Let me see what I can put together here. Just hit the like button anyway, all of you. You know, just it's free. It doesn't cost you anything. Okay, so since we're talking money and super chats, how much are we talking for likes here? Are we talking 100? 200? Or do you like different types of currency? How about a very special currency called TH bucks with yours truly as the face of the currency? This would have to take, so it would be $1 per like, I would say. So 100 likes for this. This is premium currency here. But of course we got, and this is all my YieldMax dividends that I've cashed out, of course. See, there's a lot of them. But the principal of the money, of the funds has offset the dividends, unfortunately. But yeah, so there we go. There are our real dividends. Let's see here. M. Mori says they're all going to zero. What's this here? One Dan Town. So is Tesley just a clown show while the other YieldMax funds are viable? Well, I have to say I'm disappointed in Tesley just as much as you all are, because I'm heavily invested in Tesley. Thankfully, I cap it at, like, you know, I won't go any more than like 10% of my overall net worth into these funds, but 10% is still a lot. I mean, I don't want to lose anything. I don't like losing money. I mean, it happens inevitably, but I don't want to lose a high amount of money for certain. Oh, we're getting some regulars on here coming in late tonight. Most of you all thinking to get rid of Tesla right now are holding on, hoping for the best. Well, thankfully, I've got all my Tesla dividends right here, but I could always reinvest at a lower price, because I think that's still what a lot of us are doing. But I actually started buying some of the other ones like SQY and Coney. I would hope not to lose what I put into Tesla. So I definitely would not like for it to keep dropping, but I'm kind of stuck in it. He's saying cut your losses. My Tesla's failing me bad. Yeah, it's definitely disappointing for sure. New investors on. Look at this. We got a new investor on here. Did you respond to the third choice on the poll since you're a new investor? You said, what are your initial thoughts of YieldMax? Well, I think it's good. I think it's good, but let's see. As far as the long-term prognosis on it, is it going to be good for the long term? Let's find out. It is decidedly so. There you go. So you can scoop them up now. No, I like it because it's a fund to funds. That's what I've been waiting for. I've been waiting for some like security through diversification, so to speak, being that it's a fund of funds. JEPQ and SVOL, it's funny because I sold my SVOL to get into Tesley, which I feel was a fool's errand now. And I actually wish I would have held on to my SVOL because that one's definitely more stable. At 17%, if you get like 100 grand in there, that's 17,000 a year in easy passive income, and your principal doesn't fluctuate. So that's really the key, right? Let's see. Did I miss any others comments here? The premium. Well, so I'm thinking, what are you saying for the dividend, like the premium, like dividend payout? I'm thinking it might be like the other one. So somebody did the math in the comment section on one of my videos, and they suggested maybe a 50% payout because it's going to be obviously an aggregation of all 18 funds. So it would be like a weighted average of all of them. So I'm thinking that it could be that. And unfortunately, I can't ask the advanced equipment specific numbers questions, but I would guess something around 40 or 50%. We'll see. I feel like the newer funds always pay their highest dividends early on. All right, you all. Well, it's been real and it's been fun, but I got to go for now. So hopefully I'll be back tomorrow. Like, comment, and subscribe, and super chat if you haven't already, of course. And we will see you all very soon. Thank you all for tuning in. Take care. Have a great rest of your evening. Happy investing. Oh, one more question here. Big J. So I got to be careful how much specifics I give out on that because other channels obviously watch this very closely. We had a channel live stream the interview last time, which may have helped us, may have hurt us. The jury's still out. Of course, I'll take whatever help I get on the channel, but Jay is obviously a high profile interviewee, and I'm looking first quarter of the year. That's all I'll say. First quarter of this year. So you could probably look for him within the next month or two. And we're going to get him on the podcast again, too. Hopefully we have some happy news to report on by the time he's on again. Oh, Rob Smith is on. Damn, I can't chat. Going to see the beekeeper. Beekeeper? You're into beekeeping? Well, you got to have some hobbies to put all the dividends you make into something, right? Besides Tesla cars. Let's see here. Thanks for the answers. Take care. Yeah, you're welcome. Glad to do it. All right, you all. Wow, look at that. It's already the next day here on the East Coast. How about that? I went into the next day. I'm so dedicated to putting out videos and coaching you all. I went all the way into the next day. Amazing. All right, you all. I'm signing off now. See you all soon. Ciao, ciao.